Palisade Global Investments is pleased to present the Hard Asset Conference on Jekyll Island, with keynote addresses by Eric Sprott and Dr. Edward Griffin, author of The Creature from Jekyll Island. The event will be sponsored by Triumph Gold Corp, currently drilling its 100% owned Free Gold Mountain project in the Yukon, and by Mexican Gold Corp, just weeks away from publishing its maiden resource on its Las Minas Gold project in Veracruz State, Mexico. Come join us at the Jekyll Island Club from October 19th till the 22nd. The event is limited to just 50 participants. Visit palisadeconference.com for more information. Welcome back to another episode of Palisade Radio. This is your host, Colin Cattell. Just so all of our listeners know, our event on Jekyll Island is filling up quite quickly. If you have any interest in going, please send me an email directly, colin@palisadeglobal.com. Also, one other note, I will be at the Sprott Conference in Vancouver next week, so feel free to come up to me. I would love to meet anybody. And back on the program with us today is one of my good friends, David Skarica. He's the publisher of addictedtoprofits.net. David, welcome back to the program.
Yeah, thanks for having me again.
I think there's a lot of interest that's starting to bubble up in the mining space, and that's because gold has had a few days of relief, and gold's up a little bit. So I think that the negative sentiment that was almost absolute a few days ago is a little less absolute now. There's still a lot of bearish bulls out there, but I want to ask you your opinion, David, on how you feel about gold and gold stocks.
Well, I think actually this is a real classic kind of bull market action in that, first of all, if you look at gold stocks, their history in bull markets is they tend to have these 6, 12, even 18-month consolidations after big moves higher. And because they're such a volatile asset class, usually what happens is actually they can drop 30 to 40% on those consolidations. You know, any other asset you consider a 30% drop of bear market, you know, like the Dow only drops 30% roughly once every 10 years, 5 to 10 years, where, you know, gold stocks can do it every few years. So this is, if you look at the pattern of 2000 to 2011, this is really what happened to them for the most part during that bull market, is that they would have these big moves higher, especially pre the financial crisis. And then they would consolidate, drop 30 to 40%, go nowhere for 6 or 12 months. I even think there was one consolidation from early 2014 to mid 2015 that was almost 18 months. And then they would blast off in another move. So if you go look at the HUI, it rallies from roughly 100 to about 260. It's about 180, 190 now, you know, right in the middle of that range. It's consolidating around here, and I think getting ready for the next big move higher. So, but that's what's funny about the bearish sentiment is really you're just seeing this consolidation. Now, it's probably because, number one, the HUI is still way, way off its all-time high. And two, gold really went down for 5 or 6 years from 2011 into 2016, 17. So that's probably why you have this negative sentiment, because you're like in an early stage of a bull market where people really don't believe it. But when you look at the hedge fund positions, they've now become quite bearish, which is a contrary indicator that they were actually net short in December 2015 in gold. And that was, of course, right before it started that huge rally. And then you go look at all the sentiment indicators, the commitment of traders. All of these things are really pointed to higher markets. And actually, the seasonals are bullish, too. Usually the gold bottom tends to happen in late June to kind of mid-July, right in the period we're in right now. And then it usually has a rally followed by another pullback into the fall with a higher low. And then it really takes off in the fall into the following spring. So I think we're all set up there. And then if you look at the macro stuff, you might just say, well, that's just trading patterns and whatever. How's that going to change? Is number one, we're seeing a real rollover in the U.S. dollar. The euro's near breaking out of a big base. The Canadian dollar broke out. And I'm going to have one more thing on that in a second. And now is approaching actually nearly multi-year highs. And so we're seeing these things break out, and we're seeing, now we saw the fail of the health care bill in the States. We're seeing the dysfunction starting to show there. So where everyone else, like a year or two ago, thought that, the U.S. was very stable and in Europe would say dysfunctional. Now it kind of looks the other way around. And so that's going to hurt the dollar going forward. And I really think they're going to have trouble with the tax reform and tax cut bill that they're probably going to release in August or September. So I think these things are all going to really, really weigh on the dollar. And just as a note, because I know people really get into their politics, I just think that the U.S. system is very dysfunctional now. Really nothing happened under Obama for the last 5 or 6 years, and the Federal Reserve was supporting the market. And now nothing is happening with Trump because there's all this infighting. And even within the parties are splintered. So I think this is now showing, and I think it's actually almost become a system where nothing can get done. And there's numerous reasons for this. I'm not going to get into this podcast, but I just think nothing is going to get done. And that really is going to affect the psychology with the dollar, and et cetera, et cetera. Okay, and then the final note, talk about the Canadian dollar. It's really interesting because the Canadian dollar and gold stocks almost have the almost exact same chart in the last 18 months, in that they both broke out over the first half of 2016. They both had long, like year-long consolidations. The Canadian dollar peaked a little earlier. It peaked in May of 2016, where the gold stocks peaked in August. And then the Canadian dollar has busted out of that consolidation and gone back up to 79.80 cents, right? So maybe the Canadian dollar, just like it kind of led gold to topping, by about 2-3 months last year, maybe it's leading to the upside this time. And if they follow that similar pattern, probably within the next month or two, you should see that the HUI, the XAU, and the GDX and GDXJ break out of this consolidations and begin moving higher. And by the way, again, having lived through the last couple of cycles in gold, I can tell you all these consolidations always feel like this because, again, gold stocks do drop so much on the consolidation, and then they spend so long consolidating, it feels like a bear market, even though they're in a primary bull trend.
Now that you bring up the Canadian currency, I was thinking the other day that despite the fact as an American my gold stocks might be down the last few months, since the Canadian dollar's up 10%, I've actually gained net worth in U.S. dollar terms. So that's something interesting that people probably have overlooked. If you
like I've done a lot of stock deals in the last 6 months, where I've bought these juniors and pre-IPO companies and also just private placements. And that's one thing I was thinking about as well. Is like, you know what, even if these things do nothing, I've made 10%, and I live in the Bahamas, which is linked to the US dollar. So I've made 10% of my money just by doing that, and by the way, that was a big factor in the 2000s when I got involved, the Canadian dollar was like 66 cents and the thing went above par. So, and I think one thing you have to look at it this way: Canada just raised interest rates, even though they have a housing bubble there. Probably the U.S. is going to be more likely to quickly reverse course in terms of going from a tighter monetary policy to loose monetary policy when there's some kind of disruption in the equity market. And that actually probably will help the Canadian dollar as well. And again, I think some of it might come again down to politics, where Canada has like a parliamentary system, and as long as you have a majority government, you can get things done regardless if you agree or disagree with the nature of the government. Where the U.S. and the system right now is they can't get anything passed and they can't do anything. So I think that's also gonna be a bit of an underpinning is the kind of the political background or structure. Right. So, but that should be actually the last thing I say in gold. Even though we're consolidating, we're building, we're starting to just inch up in the stocks towards the moving averages, which we need to break. I do think we need some kind of catalyst. And I don't know if that catalyst will be some really bad economic numbers, which make it obvious the Fed is just going to be dovish, or if it's a drop in the stock market, which again makes it obvious the Fed is just going to be dovish. Or, something, or, maybe like Kyle Bass is right and China blows up. I don't know what it's going to be, but we're going to need some kind of external event, which the central banks have done an excellent job of putting the damper on any volatility whatsoever. But if we get some kind of event like that, I think that's when gold and gold stocks really take off. And I think actually people are going to be surprised how fast gold actually charges and goes towards that all-time high of $1,800 an ounce, $1,900 an ounce when you get that event, and when it's obvious that the central banks, especially in Canada, the U.S., and a few other countries, have to go from tightening to loosening.
Let's expound a bit on the currency issue. One thing that the bears have brought up is that the US dollar weakening by, say, 10% has not driven a rally in gold. Now, on the other side of that coin, I will say that when gold was rallying, when the US dollar was rallying last year, and I guess into the beginning of this year, gold did a very good job of holding with the US dollar. Surprisingly, now as the US dollar is pulled back, we've had a situation where gold has not performed. And some people have said that that just doesn't happen when gold is about to rally. So what's your answer to that?
Well, I think part of the rally, remember, the euro is almost 50% of that US dollar currency weighting in the USD index. So part of it was because when the moderate candidate, our so-called moderate candidate, won in France and a couple of other these elections, and there's going to be, regardless if it's Merkel or her opposition, both candidates are pro-Europe in Germany. So it looked like the political problems in Europe of maybe countries leaving the union, vis-a-vis like Brexit, were out of the way. So I think, remember, some people were buying gold with the US dollar strong because the euro was weakening, worried about the euro breaking up. And that's the biggest part of the currency, in Europe, right? So I would think that that's part of it. And then part of the US dollar strength is two of the other currencies that are in that index, the Australian dollar and Canadian dollar, they're really linked to natural resource prices. And when oil was falling, they were falling with oil during, say, the first 5-6 months of the year when oil peaked earlier in the year. So I think, like, you look at that, it's, you got lower oil prices and you got like maybe more political stability in Europe. And that's why the dollar rallied. That's why the dollar fell, because oil's rebounded and there's now signs of political stability in Europe. So that's not like end of the world doom and gloom news. So that's probably why gold has lagged, because actually the bad news was the stuff that was causing the dollar to rally, or more like the Canadian, Aussie, and euro to fall. So I think that's really why, is like the nature behind the moves, rather than anything else. But I think if you, like I said, if you get some kind of bursting of the U.S. stock market bubble, or signs that, this political instability is going to leak into the economy, I think that's when the weakness in the U.S. dollar really becomes bad for gold. And by the way, the people who say that, well, I got news for you. The dollar peaked in 2001, right, back in the last cycle, and really held up strong, really rolled over into 2002. And really gold didn't do very much during that fall. It wasn't until about 2003 that gold really took off. So there have definitely been times when the dollar starts to roll over, and maybe in the early stages of the bull market, gold is kind of lagging.
Okay, very good. Well, I have another question for you, playing the side of devil's advocate here. Some people have mentioned the last few days that gold has had good trading days, and yet the mining stocks are lagging. Whenever a rally is imminent, people like to see the mining stocks moving ahead of gold, and that seems to indicate, belief in the gold market that it's going to continue going up. You have anything to say to that?
I really think it's just these equity bubbles, because if you go look at the last 6 to 9 months, ever since the election, there's been record inflows into ETFs. I've experienced now that kind of mania psychology for the first time I've seen since I started in the markets in 99, 2000, where people are talking about, like, I was at a restaurant I frequent here, and this woman was telling me how she trades NVIDIA and Facebook, which are two of like kind of the hot tech names, right? So it's like I'm seeing that kind of mania psychology, and everyone's asking me about cryptocurrencies, and they all went parabolic. So it's like you've got all these other things like the ETFs, the tech stocks are still hot, gold is still in a bubble. The stock market is still in a bubble, and these cryptocurrencies kind of blew off. And I think these really take away from inflows. Because remember, really, the world has changed in that people don't buy individual stocks as much. They do trade a lot of these ETFs. And then I think we're going to need inflows into these ETFs. So again, we need a kind of event. And something triggers a stock market sell-off and the whatnot, then that money probably that flows out of those, stock ETFs will probably flow into gold and gold miner ETFs. And I think that's when finally the gold stocks will start to outperform. I think until then, they're going to underperform because, like I said, these people that might be trading gold, the ETF traders or investors, and the Bitcoin traders. And a lot of the Bitcoin people tend to be kind of pro precious metals as well. But they're in more in Bitcoin right now because that's hotter and more volatile right now. I think until like those markets kind of roll over, and I think the gold stocks will still lag, which I don't think is a huge negative because I think that gives us precious metal investors more time to buy equities cheap, et cetera, et cetera. But I think as soon as you get, it won't take very much, in my opinion, too. I think all you're going to need is a 5 to 10% crack in the stock market, not even some huge crash, for that money to flow out of ETFs and to flow into gold. Because remember, we have had such low volatility. The biggest correction in the stock market this year has been about 2.8%. This would be the second lowest year on record, like the second smallest correction in a calendar year, if that was the correction, which was the largest all year. So if that happens, if a 5-10% correction happens, because we haven't seen a correction in so long, it's going to feel even bigger to a lot of these investors. So I think that's when you'll see money flow out of those sectors and flow into gold and precious metals.
All right. Well, timing-wise, David, what do you think the imminent nature is of this gold rally that's coming up? I know you said that a catalyst might be needed, but do you have any feeling on if the seasonality coming out of July and August is going to quickly lead to a gold rally?
If we're looking at a 12 to 18 month, I'd say a consolidation like happened in the 2000s, a lot of the time on the consolidations, well, we're talking this August would be like it could start this August, or maybe as late as early next year. I think it could start this fall, and the reason being is if the market does kind of start to roll over and do one of the classic, and by the way, the trading pattern, I know people look at me and say they've been bearish for a while, but the trading pattern in the market from the election to the summer is really similar to 86 to mid 87 or to 28 to mid 29, almost like identical in terms of the moves and when the consolidations happened and then the next blow off, et cetera. So if we do see kind of one of these August to October, forget a crash, just even a correction or a downturn in the market, I think that could be your catalyst, and the gold stocks might start to move higher really as soon as a month or two. Now, if that doesn't happen, and if we're in, I really think we're in a bubble blow off. Now, people can disagree with me if they want, but I think we're in a bubble blow off in the stock market. I lived through the late 90s, and this is the closest thing I've seen to it. And so the question is, do we get one of these summer peaks to fall crashes or corrections, or do we get a blow off into the end of the year? That happened in the Nikkei in 1989. So if that happens, probably you're talking early next year. But if we get one of these summer tops in the stock market and the correction in the market is the catalyst for gold, could start as soon as August or September. But there is a warning. If I'm right and we get a severe correction or maybe even a crash, the warning is the gold stocks, probably for the intense selling, like a few days or a week or two, are probably going to get taken down with the market. Now, if I'm also right, they will have rallied way up into that last part of the selling, but they usually fall with the market on a really bad crash. They did that in 29. They did that in 87. Even forget 2008 because they had went up with the market from 2002 to 2007. But even in 2002, near the end of the bear market in the Nasdaq, there was a big correction in the gold stocks that July when the selling got really intense in the stock market. So usually they tend to fall during the most intense part of the selling, but I would think they will rally a lot into that. So they're still worth kind of holding on to here. So anyhow, basically between now and I think February, March of next year, they could really move. And again, the seasonality backs up more that they'll move between now and the fall.
All right, David, well, we're about out of time here. I know you had something to mention about your newsletter service for the audience.
I'm ending my yearly billing to the newsletter, and we're just going to quarterly and monthly billing. So billing for the next week, we're going to offer 15 months for the price of 12, 3 bonus months on the yearly billing. So if you go on the website, you'll see the link to that, or write me at info@addictedtoprofits.net, and I'll tell you where to go. And this will only be open till about July 24th. So try to get on that ASAP.
Great. David, thank you so much for coming back on the program. Once again, David's the publisher of addictedtoprofits.net. We'll have you back soon.
Sure. Thanks for having me.
think you understand the junior mining sector and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
How violent that term could be, it actually could be quite violent. It could be a rip your face off uranium rally.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen?